Brandon Arnold, though, is the Executive Vice President at the National Taxpayers Union, and he joins us now. Bell set to ring. There it goes. Hey, Brandon, welcome to National Report today. Again, you always start the day off very positive. Everyone's cheering and clapping as we take a look at the markets. But what are your anticipations today, considering the Fed's announcement on possible interest rate hikes?
Yes, well, I do think there's going to be a significant interest rate hike. We are talking about probably a 75 basis point increase. But markets seem to be somewhat inoculated to these rate hikes because we've seen so many. This will be the fifth this year and the third consecutive 75 basis point hike. So I think markets have grown accustomed to it. They've suffered through several of these rate hikes so far, and they've seen the sky has not fallen. Now, there may be damage to our economy in the medium or long term from these rate hikes, as it could push us closer to a recession. But in the short term, I don't think markets are going to fall in a significant way this morning. We'll see. They can be very volatile, but I don't think it's going to have a devastating impact on markets.
Yeah, the futures had it in the green. It was correct so far, opening in the green. The Dow up 176 points. Remember, they closed down, and the Nasdaq up 44 points. S&P 500 up 23 points at this time. Again, they're at opening bell. So good news so far. We'll continue. A long day ahead. Talk to us about this, the interest rate hike. It's been tossed up if it would be 75 basis points, if it would be 100 basis points. It may not seem like a lot to the average person, right? But 25-point difference. But it is a major jump should the Fed choose one over the other.
Yeah, it's a big increase, whether it's 75 basis points or if they go to a full 100. I think the safe money right now is probably on the 75. But any way you cut it, when you combine that with past actions over the past several months, we see a very, very significant increase in interest rates. And that has a big impact on, of course, big ticket items. You mentioned housing, buying an automobile, anything that you need to finance. We're starting to see those markets cool. There's signs that the housing market in particular, there's fewer permits for new construction being issued right now. So we are going to see housing prices probably start to taper off, starting to even reduce in certain markets in the very near future. That has a big impact on everyday families, of course, and that can certainly impact people's buying and spending decisions if they're trying to get into a house or if they're trying to downsize, sell their current house right now. So that certainly impacts everyday Americans in a significant fashion.
Yeah, if you were holding off, you're buying a home now, a lot of folks are saying lock in today before this actually happens, if you can even do it. If you are moving forward, you can always refinance later, but there's nothing to say that the rate won't continue to go up. So we'll continue to watch that. Brandon Arnold joining us live with that report. Brandon, thank you so much. We do appreciate your time.
Thank you.
Got it. Meanwhile,